Well, the price of Bitcoin hovering above the $38,000 handle right now, but we saw it soar yesterday, topping $40,000 for the first time since June on news that Amazon would begin accepting crypto payments. The company's since coming out and denying those reports, and we've seen the moves on the back of that. Let's bring in Jody Gunsberg, CoinDesk Index's managing director. Jody, it's good to talk to you today. Walk me through some of the moves you're seeing today, because it seemed like there was a lot of hope riding on the largest e-commerce player starting to accept Bitcoin, but we've obviously seen a bit of a pullback since.
This is a really important point that you're making here, because when we look at companies, equities, big publicly traded equities that are household names in terms of how they relate to crypto, we think of, for example, we saw yesterday the filing for a Goldman Sachs DeFi blockchain equity fund. And equities used as proxies for underlying assets, whether it's cryptos, commodities, real estate, they don't really give you the same thing. They just double down on what you already have. So this DeFi index has 100% equities, things like Nokia and Facebook and Google and Microsoft. And as Jim Kelleher said, deciphering where these revenues are coming from in some of these tech names, or even in this case, financials and communication services, can be challenging. So you're really not getting any kind of a crypto exposure with this. You're just getting more equity beta.
Yeah, I mean, when we talk about DeFi, it's obviously tricky if you're trying to build out the offering there for Goldman Sachs and other people running some of these ETFs. It sounds like, a selective the index that they're going to be trying to track, it sounds like that index, the Selective Decentralized Finance and Blockchain Index, wasn't posted necessarily on their site. So still some questions around what they might be including in the ETF itself, to the filings out there. But I do wonder, Jody, when we talk about the institutional demand that's still there, the fact that even Goldman Sachs is applying for an ETF to open this up does seem to point to continued institutional demand, and that's still holding up here, despite the fact that Bitcoin has come down quite a bit from that all-time high. For the back half of 2021, what does that signal to you as maybe more momentum to carry us through?
I believe that the institutional demand is there. However, I also believe that filing an ETF of equities only is a shortcut, and you're going to get what you pay for. And what that means is that with equities that are trying to represent these underlying assets, companies do things that have nothing to do with these underlying assets. They may pay dividends. They may even hedge out the volatility so that their revenues aren't moving with the volatility of the underlying assets. You see this all the time in like oil drillers and services versus oil, or gold miners versus gold, or REITs versus real estate. You end up with correlation that's just about maybe between 0.4 and 0.7 to the underlying assets, and with really high equity beta. So you've got to understand that you might just be buying more of the same with one of these funds.
Yeah, obviously, I guess the one thing that will connect the traditional tech world with the crypto world is maybe a misunderstanding of technology when it comes to the people who are meant to be regulating. And we got a little flavor of that earlier from a crypto panel on the risks for Americans. Just want to play a bit of the sound we heard from Senator Sherrod Brown warning about the risks for Americans' money when it comes to cryptocurrencies. Take a listen.
From tech giants like Facebook's Libra or Diem, or however their PR consultants attempt to rebrand it next to fly-by-night operations, we've seen far more empty promises than we've seen viable cryptocurrencies. A cottage industry of decentralized financial schemes has also cropped up alongside these alternative financial products in the hopes of creating a parallel financial system with no rules, no oversight, no limits. They claim to enable transparency. Their backers talk about the democratization of banking. There's nothing democratic or transparent about a shady, diffuse network of online funny money.
Now, there is, I guess, a bit of truth to the transparency piece here, Jody, because we have seen state regulators start to put some pressure. You can look at what's going on with BlockFi and what they're talking about with, interest earning accounts there on crypto assets, and kind of the pressure that's mounting, not just for BlockFi, but other things out there. What does that look like to you as we do see regulators maybe step up their pressure in the crypto space?
I think increased regulatory pressure is promising. It's good. It means that they're paying attention, that the crypto has a space in this, and that the clarity that we need is coming forth. So again, this is something that we see in other emerging asset classes where regulatory rules and clarity will come in. But one of the confusion is that even in this index, digitalization of finance or decentralized finance, we know DeFi as decentralized finance, and that's a lot different because that means that we have this central intermediary that might be able to work without what we know as traditional custodians or banks. So that may be a lot different than the digitization of finance that these companies might be offering. But where's the transparency in these companies like Facebook or Google or Microsoft or Nokia? How much of DeFi or crypto are they generating revenues from? That's very difficult to tell.